How's it going out there? It's March 3rd. And I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down headlines and tell you what's really moving these markets. You know, just when I turned the corner, and it took 10 years, but just as I turned the corner, started talking positively about Florida, its amazing COVID response, they're keeping businesses open. That's a super low tax rate, great weather. I'm proud of living here after moving here from New York, place I live for over 35 years. It was a big change. But just when I turned the corner, started being positive, bam! Florida goes back to being Florida again. Now, if you're new to this podcast, for years I talked about the transition of a New Yorker moving to Florida, how everything is super, super slow here. Super slow. I mean, if the speed limit is 55, they do 45. The work ethic down here is much different. People don't like to work down here. It's not that they're relaxing on island. No. They just don't like to work. Like, they don't show up to places, whatever. It bothered me, right? So you're conditioned a certain way in New York where everything's like quick. If you're at a light and it turns green, if it's a quarter of a second, there's a horn. Here, it's if you beep the horn, they yell at you. They get mad. I mean, I can't tell you how many people give me the finger that I drive by them because, you know, we have a lot of construction going on, and we have, you know, live on the coastline in Florida, as close to Georgia as you could be, right, in the East Coast. And once you get off I-95, it's a good, 12, 15 miles, and it's a two-lane, I wouldn't call it a highway, but they're doing a lot of construction on it. And when it opens up a little bit, the left lane is for passing, and it's a 55-mile-an-hour speed limit, and people would do 35 in the left lane. And I'm like, riding them, going, come on, move over. And as I pass them, they get angry, and they give me I'm like, like I'm the idiot that you're doing 35 and a 55, no one in front of you, and I'm the idiot. Anyway, so I told a bunch of stories, but then I started coming around with Florida because New York has been absolutely horrible. All my New York friends are, starting to move down here in the hedge fund world and things like that, and even close friends. But Florida is still Florida. And for me, it took 10 years to find something simple, looking for a landscaper that does everything: sprinklers, mows the lawn, blows the leaves, trims the bushes, while, treating the grass. And during those 10 years, I would say I went through about 15 people. I did find one older guy, really, really nice guy. He's also great to my family. But all he does is mow. Right? He doesn't trim the bushes, treat the grass, just sprinkle. He doesn't do everything. Just mow the grass. So I wound up letting him go to hire a full-service firm because this full-service firm said, hey, you know what? We're going to come in, install the grass, but in order to do everything, we want to make sure we're mowing your lawn. And, I told him about it and ended up, just, I wouldn't say firing him, but, I said sorry and, gave him a nice little package and everything and said, but, I really need this because we're so busy, my wife and I. We're really, really busy. So I hired the full service firm. Again, they said it's everything or nothing, right? So I said, F it, let's hire. So they started out by installing all new grass in my front yard, which is a few $1,000s for anyone who knows that does this, right? Then I signed a contract with them in November, not long ago, for every one of their services, their full package, checked off everything. But come mid-January, I noticed that no one's coming to treat my grass, cut my lawn, do anything. Just stopped showing up. And in January, November, December, by me, it's cool in northern Florida, believe it or not, in those months. It's seasonal. It's not as hot like Miami and Orlando. That's what people think of Florida. I'm 45 minutes north of Jacksonville, so literally right on the Georgia border, right? The first town. So you really don't need maintenance during those months. Very, very little maintenance. It's not like it's crazy. It rains a lot or the grass is going to grow out of control. It's, it's chilly. So I was like, okay, maybe they just take a couple weeks off. Then we roll into February. Still nobody's showing up to take care of my lawn, which is insane because I actually paid them. And this is late January, which is the last payment. I said, maybe, they're going to, I don't know. I was just like, oh, okay, maybe, again, it's not that busy. It's whatever. Now the lawn's starting to look really bad. It's starting to look terrible. And by the way, I got to throw this out there. If you want to make $100,000 plus, become a landscaper in Florida because nobody, 0% of these guys show up consistently. I've never seen anything like it. I mean, it happens a lot of business, but landscaping particularly, I just cannot get a guy to service my lawn for more than like 3 months that's going to show up. Ever. I don't know what the hiring process is. And what questions are you on probation? Yes. Do you do drugs? Yes. Will you promise stop showing up to work after 2 months? Yes. Great. You're hired? I mean, what is going on? It's insane. I mean, it actually pisses you off. It's like, just say what you're going to do. Again, it's not just landscape. It's almost every company I hire to do a job in my house since I've been here. And I know I've gotten used, that's the way it is. You're not going to change it. It's the culture. You're going to get screwed in the end. They're really nice at the beginning. They're not going to show up. I still can't comprehend it, though. It doesn't go in my brain where, hey, you're going to get screwed no matter what, and these guys are going to stop showing up. For me, it still bothers the shit out of me. If you say you're going to do something, if you make a commitment, then do it. Just show up. Anyway, so these guys have not treated my lawn or cut my lawn for 2 months now. And I call them and say, hey, you guys alive over there? What's going on? Did your building catch fire? Can't work anymore? Anyone have a serious accident? I'm like, what are you talking about? So you're supposed to come take care of my landscaping. And my house went from really looking nice because we needed it. We needed new grass and everything. To now it's one of the worst in the neighborhood. It's embarrassing almost. Where I'm going to get a letter from the HOA, and everyone who does HOA and those housing people, it's funny because those are usually people I think that were picked on when they were younger. Now they're older and they want to have some kind of power. So, they just take pictures and bust your chops. Yeah. You don't want to get a letter from them because it's always annoying. So the guy texts me and he says, the landscaping guy, we don't have a contract with you right now. So I sent him the actual contract from November that I signed and said, here, checked off all the boxes. Here it is. He says, yeah, but every contract ends at the end of the year. Magically ends at the end of the year. Imagine if Netflix did that. Sorry, you don't have Netflix. Oh, why not? Well, it's December 31st. We cancel the contract. I mean, do you hate money? I don't know, maybe. But I asked him, why is that? I mean, do you really think that I signed a contract? I told him this in November and checked off all the boxes for your full suite of services just for the months of November, December, when nobody really needs maintenance at all on their lawn? Do you really think that's what my intentions were? Did you ever think about sending out a renewal contract or maybe calling me? So, I just installed new grass. I'm a good client. I'm looking to hire a good landscaper long term, right? I had this conversation with you. So he says, sorry, all I know is that there's no contract. That's all he said. Contract ended, and then points to like 2 small clauses in his contract that he sends me, like pictures and circles it, how they're not liable, all this BS. And I'm like, you're an effing landscaper. I mean, my contracts here with analysts are 15 pages less than theirs. And they're just cutting my grass. It's just crazy. If you ever see companies with long contracts, crazy contracts, it usually means because they're screwing somebody or they're screwing you, right? They've learned, they put all this garbage in there. Even every firm that I wanted to get hired at, they're going to throw everything in there. When you go to lawyer, they'll be like, oh, okay, we'll take this out, we'll take this out, we'll take this out. We're not going to give you a pay package. We can fire you whenever you want. You can't work in this industry for 15 years. All this stuff they're going to put in there, non-compete, everything. You got to get a lawyer to look at it, right? So, the long contract should have been a dead giveaway, but I'm like, it's landscaping. Let me just sign this thing. Guy's got to come. Shouldn't be a problem. I'm flipping out on the guy because my lawn's shot. The grass is dead. I had no idea they're just going to suddenly turn away business, never show up again. Actually, I should have had an idea. Maybe I should have known better since, again, landscapers, they don't show up. That's part of, I don't know. It's part of the process. You have to learn it. It's crazy. It's like they broke out of jail and are on the run and can't come back anymore. Never seen anything like it. But to make things worse now, I go back to my previous guy, the older gentleman. Again, greatest man in the world. Really, he writes his letters and everything. He's just really cool. But he only mowed the grass, and I needed a full suite of service. My wife and I are very busy. And before I hired this firm, he knew of them, and he warned me. And then after they installed the grass, he said they did a really shitty job. Since the grass they installed, weeds started growing through the brand new grass in weeks, which means they didn't treat it before, which they should have done. I don't know anything about landscaping, but apparently that you're not supposed to have weeds coming through your brand new grass inside in a couple of weeks. And he warned me. So now Monday I pull up and this person is mowing my lawn, right? The older guy. I guess my wife spoke to him about the situation. Now he's mowing our lawn. He cleaned a couple things for us, did a great job. And the first thing he says is, and keep in mind, when I get out of the car, the mower's loud. And then he shuts it off and he walks towards me and says, hey, look, I told you so. I told you about these guys. But hey, you still fired me. I'm like, great. So I got to listen to him tell me that I fired him all the time now because now we hired him back. But I guess I deserve that, right? He's going to remind me all the time that I fired him and how I should have kept him. And I felt really, really bad. But he is a great guy. And again, it's just the landscaping thing. I just don't get it. And again, it's not just landscaping, but the Florida culture. You know, everyone I hired to do a job on my house so far, everyone. And I'd say maybe 2% of the people did a great job. It paid them. Everything worked out. But most of them show up for a few days and disappear. And they only do a half-assed job. Better yet, they say, you know what? I'm going to be there Tuesday, 1 p.m. Like nobody works. No one in the world works. I'm going to be at Tuesday, 1 p.m. I'm like, how about like 5 or 6 or you know, maybe early before Tuesday, 1 p.m. And then I'll like leave work for an hour and go home and they don't even show up. They don't show up. You know, it's the best. They come 2 days later and knock on the door like nothing happened. Hey, I'm here. You want to talk about landscaping? You know, I'm from New York. I'm like, are you effing kidding me? I mean, I slammed the door in his face because I was so, you're wasting my time, but I don't get it. I'm still trying to figure out the culture in Florida. I love it here. It's great. Everybody's moving here. And this is a shout out to everyone that's moving here. Just expect that. Expect it. Expect things to go very, very slow. Expect people not to work hard. You're going to call people and they don't call you back. You leave messages for businesses. They'll never call you back here. I don't know. It's just crazy. Don't I get used to it? I was trying to get used to it, but I guess not. So a mini rant there. Anyway, hopefully they improve their work ethic, and there's a lot of newcomers coming from the Northeast down here and migrating from a lot of the crazy states where they're going to have lockdowns probably for another year. Cool for Texas for saying, hey, you know what? We're going 100% open now. No mask mandate, which, again, is optional. If you're going to wear a mask, whatever, but it's not mandated. And everybody's like ripping them apart. But hey, I mean, I think Florida's going to be next to do that. And you're going to see a lot of states follow suit because, you know, what does that do? People are going to lose control, right? Politicians lose control. They want to close the businesses, have control over you. Now that they lose that, you can see all the backlash. But we're opening up. Things are getting better. Anyway, it's not going to stop the migration coming down to Florida, Texas, no income states. Just remember, it is different. The culture's different. Weather's great. It's awesome. You're going to be making more money, almost like a raise because of the tax structure. But remember, they're also negatives, not just positives to every situation. Anyway, so bring it in Joe Davide, who's my nephew. And Joe, I want to say thank you so much for coming on, first of all, because I wanted to segment into this because I know that you moved here. I'm sure you saw. I tell everybody this, and everybody thinks I'm exaggerating. It's a funny thing. My sister came here. My brother came here. And when I have friends come here, even my workers who we had last week, my partners for the firm, we had meetings all last week, and I flew them all down here. Same thing. They're like, holy cow, man. I said, no, I'm not exaggerating. But, I mean, I'm sure you saw some of this stuff, right? So far?
Yeah, thanks for having me on. And, yes, right when I got here, the landscapers clipped a sprinkler head. I was like, really?
Did they let you know?
No, they didn't even tell us. They put a plastic bag on top of the head and just drove away. And I'm sitting there and I'm like, the water's... They wonder why they put a plastic bag so the water doesn't shoot up in the air. I'm like, really? We didn't find out for like 2 weeks later.
I'm telling you, it's crazy. And then, so my daughter had a birthday, right? And we ordered... I think donuts because she loves donuts. So we had donuts and we ordered, I think like 3 dozen chocolate frosted donuts, whatever it was at Dunkin' Donuts. So Joe was coming by. I said, Joe, could you do me a favor with something? Could you pick them up? And what happened?
So we,
what happened?
I drove over to pick them up. And next thing you know, they didn't receive the order. And I'm standing there and I'm, like, what do you mean? The order was sent? Like, you were given the order like 30 minutes ago. I'm here, like, it's pretty simple concept. Place the order, pay, give me the donuts. They didn't even have the order ready yet. Then next year, they gave me the order and they forgot one of the key pieces of the order, which was at the time in the fall was, what was it, a pumpkin spice type of donut. Didn't even include it. So I was like, all right, you got to go find one. Like, oh, we're out of stock. What do you mean?
Then they found them, right? You said, I'm not leaving until you get it.
I said, that's the order. Like, I'm not going to leave until you find it. And they're like, okay. 5 minutes later, they brought me one in a bag. And I was like, thank you.
Who are they going to do with those donuts anyway? Like, I don't understand.
Eat them.
I don't know. Anyway, listen, that's not the reason why I brought you on. I brought you on because Joe was on a couple of weeks ago. And yeah, he was talking about his portfolio. Maybe about a month or two ago. We had him on in this segment. And it's just like, he's a young investor. He works for Curzio Research. He also has his phone rescue shirt on because it's my other business, which he helps run. But he does a lot of the... social media. He books a lot of the guests for me. You know, he's always looking at ways to improve our social media presence and videos and things like that. And just, you know, watches the biggest influencers out there. But just a tremendous help, because that's what I want to do in our business, is really get young people to, that's how you really, grow your audience, right? In this market where you have to see what attracts the younger generation of why they're listening to certain people and not others. But anyway, we talked about your portfolio, Joe, and it was interesting because you said that, you know, you did have a lot of winners.
Right.
Things were going good. You're buying call options. This is when the GameStop frenzy was going on at the beginning. And you were doing pretty well. But I actually bought your portfolio this week. And, you know, it's so cool that you're coming on to talk about this. It's important because, you know, it's for young investors out there. And I get a lot of emails about this. And one of the things I said is I can't teach young investors right now because they have to go through the emotions. They have to get their ass handed to them. And that's something I can't teach you, because I can't tell you, hey, here's how you make 10%, 20% annually, or, you know, whatever, depending on what the market conditions are. And when you're making, you know, 100, 200% in a week or so, right? Just on options and trades. So tell me what's going on with your portfolio, because I know it's doing really well. But when I spoke to you, tell us what's going on now.
Yeah, right. So as I guess a portfolio update from last time, a couple weeks ago, I was more into options. And then now I totally shifted gears and I'm more invested in shares. And right now in 11 companies, my entire portfolio is red. You know, the market took a dive last week and now it's a little, you know, and my portfolio is dipping again. At that time I had $10,000 in this portfolio. I made, you know, another $2,000, took a chunk out because I had a big purchase. So now I had $5,000 in here. And now my account value is at $2,500. So pretty much half of it's wiped, just the losses, which I don't plan on taking a loss on any of these stocks. I'm not going to take the money out. I'm planning just to wait till it's green, like even if it's $1 of profit, take it out, and then, you know, I'll shift gears back to maybe a mix of options and stocks, but everything's red currently. So
now it's interesting because there's a lot of things that you said there that I want to cover here. Mm-hmm. And one of those things is, you're not going to sell any of these things.
Nope.
Why aren't you going to sell them?
I'm not taking a loss. I'm not going to just shave off half my portfolio just because of the timing of it now. I'll just wait an extra. I mean, hey, if it takes a month, 2 months, a week, a day, an hour, whatever it is, I'll wait till it's green. Or somewhat where it's not 50% loss. It's like 10%. I'll be like, all right, now I can allocate that money somewhere better, you know, and see where that goes.
Now, what happens if they go lower?
If they go lower, I mean, you know, excuse me, they're not options, they're just, you know, regular shares. If it goes lower, I can wait, you know, but most of these already have a 30% loss or a 10% loss. One of them is like around 60%. If it's really damaging, where, for instance, like Ajax, the SPAC, it's run by a lot of big names, the Chipotle founder, the Square founder, Jack Dorsey's in it too. You know, it's a pretty good mix. I bought that at $11.50. You know, I put $1,000 in it, and I'm only down like $22, whatever. But that, you know, it's a SPAC, so I'm not worried. But unlike that, where it's, you know, like say Whole, another SPAC, that I'm down over $200. If that SPAC doesn't fall through, then that's it. You know, that's gone.
And a lot of these stocks that you own are all really aggressive stocks, right? These are all aggressive
Correct.
names, ESG holdings and stuff like that, like Plug Power. And I said, you know, what are some of the stocks that you would like today? Because you really can't purchase anything today, you said.
Even like last week, I was looking, I was like, it's a great opportunity to buy, but I'm not going to take a loss and use that money and then risk that money again. So yeah, really, I loved even Apple too. I thought it was great last week. Apple, I would have put a call option on that. AMD, same with that. I would personally buy NEO shares if I had the money. Same with Plug and CCIV, the Lucid merger. Although I think that's a great price, even though, you know, it was just at $60. I think it nicked pretty much almost $70. And now it's trading at what, 25, 20, 30, somewhere around there.
So when you're looking at all these names, Joe, and I want to go, because I just want you to explain everything to because you were listening to me and you said that, you know, because you listen to the podcast all the time.
Right.
You come here and listen to them as we're taping. We tape, you know, mid Wednesday afternoon, and this gets published at the end of the day. So if we're talking about Bitcoin, it could be 10,000 dollars higher,
Yeah.
right? In
Yeah,
4 or
it could be
5
anywhere.
hours or whatever. But you're in here because you listen, because we blast this out to social media networks and cut it and cut different things that are whatever. And one of the things you said is, hey, you know what? I was listening to you, Frank, and I talked about the past couple of weeks, and I said, why you need to diversify, and you were funny because what did you say?
I got molested. Verbatim molested last week. But it's true because I'm really in tech stocks or like EV stocks, like SIRC that was a partner with Tesla for solar panels on roof, like all those type of kind of small cap stocks I'm into. I'm not in any other sectors. So pretty much when the tech stocks crumbled, like that's pretty much my whole portfolio is tech. I don't have anything outside of that. So I didn't really understand the whole meaning of diversify. Like, everyone was talking about it. I was like, you know what? Like, I didn't put it into an account when I was kind of researching the stocks, and then now it's hurting me. So it's definitely a valuable lesson to learn.
So what would you do differently now? Because when I told you that, it's hard to teach you. You're like, I want to learn about stocks. And I'm like, it's really hard to teach you, actually. It's not the easiest thing to teach you. So I'm like, if you really want to learn about them, you have to go through the emotions of, it's not just having losing positions and learning and risking, because options are extremely dangerous because a lot of them, again, you could hedge yourself, but it's all or none. And if it doesn't work out, you could have the thesis on a stock that's $10 and say, hey, I think it's going to 15 and whatever. You price the options out 3 months and they come out with a bad quarter. The thing goes down to 6, 7, you're done.
That's
and
it.
6 months from now, I think it could be 40. So, you like a stock and you love it, you want to try to realize those catalysts, but you never know what's going to happen in the short term because now you're bringing in market conditions. Oh, you bring in so many risks, right? Tons of risk you're bringing in. It's like, what do you do?
I
You
mean,
have all these risks. What do you do? I mean,
Yeah,
it's crazy.
so-
It's like, okay, for me, when I look at this, Joe, I see a lot of the mistakes, but what are some of the lessons that you learn the most? Because one of the things I'm gonna say and critique, I don't want to say criticize, is holding losers is the worst thing you could possibly do. Why do you think that is?
I know it it's definitely a bad feeling. I mean, these were not losers a month ago. Everything was green. Just the market took a turn, and I can't control that. I didn't foresee this. Nothing's gonna stay green forever. With the options tradings, I usually try to put a stop loss on it because after I lost big on one of those option calls, I'd set a stop loss like 5%. So even though I'm risking like, say the premium was like $1,600, 5% of that for an infinite gain, or like I'm looking for a 50% gain, so I'm really managing my risk, but I kind of got out of the option game for a little bit to try investing, and then, everything's red for now, but, in the future, I'm definitely, I think everything's going to come back. I'm not too worried, but psychologically it's like it messes with you a little bit, but this is what the stock market is.
So, are you familiar with stop losses?
Mm-hmm.
Okay. One of the things with stop losses is no perfect system, right?
Yeah.
I feel like for me, my greatest thing is being able to find discounts. Sometimes I'll be a little early on them, but selling them is always tough, right? Because you never really know when to sell. You can't really sell based on valuation. You want to let that momentum go. But
Right.
what the greatest investors do is they always maximize their upside potential. So if it doubles, maybe they sell half and they still own it, right? They lower that cost basis to 0, which basically means that, you bought the stock at 10 and went to 20, you sold half. You took all your original money out and you're good.
Mm-hmm.
Outside, not including tax purposes. So now if it comes down, you don't mind because you have it long term and you're keeping it. And now you sell half and you're liquid and you get into another stock. But having stops on it, what's the most important thing? Because I've seen stocks come down, trigger. And one of the examples was Delta Airlines for our portfolio. We do very, very well across all of our portfolios. But Delta, it's a little bit early on in like April, May and said, listen, it's going to bounce back. Everyone said it was crazy. And it did come down. I think we had a 25% stop on it, and it hit it, went a little bit lower. And I think that was we might have got stopped out like 29 or something.
And then it jumped, right?
Oh, yeah. It's to the roof. It's like
I know,
45, 47 now. But that's the worst case scenario. But let's look at it from a bigger perspective. You're going to be wrong. The only person who's not wrong is me. No, I'm joking. You guys know, I cover my lose money. Everyone's going to be wrong. If it's Buffett, Buffett talked about with Precision Parts how much he lost. You look at Ackman with the Target and all that stuff, and just J.C. Penney. There's just so many different. Every single person has losses, but the best investors limit their losses. And when you put in stop losses, Joe, one of the things is it takes the emotions out because Once you hit that stop loss, you're out. We just stopped out of our first stock probably in like a year in one of our portfolios in Curzio Venture. And it's a name that I like a lot, and I think it's going to go higher. And I also add more. It's a personal position of mine. Again, I own a lot of the stocks that I'm recommending, right? I eat my own cooking. And now that it hit our stop, we're out of it. Now I'm okay, right? So okay, we're out of it. It's fine. The rest of the portfolio is doing great, but now we have money on the sideline that we could put into the market. Maybe this thing declines another 30, 40% from here. Nobody knows how much higher, how much lower they're going to go, or if the market conditions change. But now you have, some powder there where you could add to whatever positions you want or build new positions for the next idea, whatever it is. But that's one positive feature on stop losses, Joe. Another thing is it removes the emotions. When it hits it, you're gone.
That's it.
And now you're moving on. Because right now, what are you thinking about? You think about all your losers. It's the worst, most unproductive thing because you could have 20 stocks if you have one loser in your portfolio and it keeps going lower and lower and you don't have a stop on it. That's the one you're going to focus on every single day. That's the one you're going to look at every single day. And you're just like, it's lower. And you might buy as it goes lower and buy a little bit more because sometimes they don't always come back. We're in a market where young investors are used to everything coming back. Just keep buying the dips, Fed's going to be there, buy the dips. It's not always like that. And as you can see, right, ESG stocks, a lot of people getting in, like even marijuana stocks. People don't know most marijuana stocks down 25, 30% in a couple of weeks, right? Yeah, I mean, look at Tilray went from like 7 to 35 and then went to 65. But I know a lot of people bought it 50, 40, and now, it crashed all the way down. Which
people got hurt.
And they're actually merging with a company where, the ratio with the split in shares showed that this stock has to come down a ton based on where the company they're merging is trading at. So it was an easy short. Really no risk short for investors and it pushed all the way lower. I wouldn't say no risk because maybe they could push up higher like they did with rocket companies and stuff, rocket mortgages. You saw that it's up 40%. Now it's down 20% today. It's pushing around short stocks. But one of the things I would suggest, Joe, is definitely stop losses. Use them because it takes the emotion out. That's the biggest thing. You're out and that's it. And trust me, you're going to be really wrong on a stock where it triggers your stock. There's stocks that triggered. My thesis didn't work out. Took a 25%, 35% hit. And I've seen those stocks decline by another 50, 60% because management just wasn't getting done and whatever. And instead of me being in the stock the whole time and looking, I go, what the hell? Management sucks. And what are they just complaining, going crazy? I'm buying the next idea that I like, which, I'm fortunate being in a position with my network where I get lots and lots of really new ideas and get into trends early and travel around the world. But that allows me to invest in new situations,
right? Which
is cool. Another thing, too, is don't be afraid to take a loss. You don't know if they're going to come back. And if they don't, you're screwed. You look at it, it's going to come back, it's going to come back. Maybe you're right. Maybe it does come back tremendously. But what happens if it doesn't? Now you're sitting in your portfolio. Again, there's a lot of things that are working. Travel-related stocks are working. Cyclicals are working. Energy's working. Financials are working. And you're in a sector that you bought near the top that's coming down. Another thing, Joe, is the option part. Options, I mean, I'm not going to say this and put an age on it, but really, if you're under 25 or if you're a new investor with less than 5 years experience, don't buy options. Mm-hmm. You could buy covered calls or whatever, but options, I mean, you're playing against Wall Street elite, and they are going to take you and throw you out, spit you out. You'll have one sock left, and they'll take the sock off too and say, nope, that's Wall Street. Yeah. I worked there. That's how they are. They kill you. They crush you, and they have a lot of money. And I know we have the Reddit crowd going, wow, look what we did to Melvin Capital. It's $12.5 billion. It's $1 trillion industry, man. It's a huge industry. So, a lot of lessons there, a lot going on. But I really, really appreciate you coming on and telling me this because I know there's a lot of young investors that have the same problem. But the only way I could teach this, Joe, is by you going through the emotions of losing that money, right, having your tail between your legs and understanding the risk, because those mistakes, what you don't realize is the best thing that could happen to you. You're in a great position. I mean, the greatest lessons that you could learn is you learn them from your mistakes when you're in them. That's what life, that's investing, that's what everything. Because then you're like, you get better, you get smarter. Mm-hmm. And that's the goal. We're still going to make mistakes, investing. I'm still learning something new every day. That's why I love what I do. It's always a challenge. It's like golf. If you shoot a 59, you're going to try to shoot a 58. There's no satisfaction. You can't be 100% right. And that's why it's the most competitive sport ever. But learning from your mistakes, Joe, and just understand that you have tons of working power. Hopefully you're going to be an analyst here and learn a ton. But at this stage, now it allows me to teach you a little bit more. And now that you went through that process, and I know a lot of people, and I went through the process. Major hedge fund managers that you're on TV went through the process. Yeah. Everybody went through this process. It happens to everybody, and you learn from it. There's not a billionaire investor that's going to tell you that at the beginning they didn't get crushed or didn't. That's how you learn. That's how you smarten up. That's how you invest. And learning this at such a young age, guys, don't get discouraged. If your portfolio is down and you're getting, use it as, hey, this is what I learned, but stay into the markets. Try to stay into the markets. Try to learn from your mistakes. Don't get discouraged and say, stocks suck, I'm never going to go into it again, because they don't if you invest right. And that's something I could teach young investors, but I can only teach them after they go through this process. So not that I'm happy that you lost money, but you see the impact of it, right? And it's
Exactly.
just, it's something now we can go back and say, here's what you're doing wrong. Put stops on it. Big deal. If you hit a stop, you have your money. Now you can buy it, whatever you want, or it comes lower. It's just, especially with the options and putting a time value, you don't know what's going on with the market. Say if the stimulus doesn't go through. Say we saw interest rates rise tremendously, long-term rates, and push the market down. What if they continue right? You don't know what's going to happen. You don't know if we're going to go to a war. You don't know North Korea launches a missile that comes close to us, whatever. But when you have options, you bring all that into play when really it's not a long-term concern, as long as that nuclear missile doesn't hit us. It's not a long-term concern. But that's the biggest lesson I could teach you about that. But, I want to thank you for coming on, Joe. It means a lot because, and I said that I'm not bringing you on to Chris. I'm trying to bring you on to help you. And I told you beforehand, I said, are you okay with this? You said, absolutely, because I want to learn. And I think this message resonates with so many young investors out there. And for you young investors, listen, the best thing I could do to try to help you out is listen to this podcast. And it is absolutely for free. You listen to the podcast. We have it on iTunes for free. We have it on a Curzio Research YouTube page, all the videos and everything for free. You're going to learn a ton. I cover my losers more than my winners. And I also have great guests who I vet, which, is my job to make sure I'm putting good people in front of you. And then if you want to start a package, you would go to a $1 Stock Club, which is $4 a month, where we take a pick from, each week from our investor. And it's cool because these are picks that might be new to my audience because these are from my guests, not specifically from me. And I cover all sectors, but sometimes they'll come up with stocks. I'm like, wow, this is pretty cool. We'll do a one-page report, provide a stop loss on it, a buy up to price, and it's $4 a month. And you can cancel 1 month if you hate it, but you're getting new ideas. You're seeing how the research goes. That's our goal, to try to teach you, to get you into a very low price products, not going to hurt you. You also have free trading with so many apps. But that whole process, that's how you become a better investor. And again, Joe, I just want to thank you for coming on because it means a lot, man. You got to be humble.
Thank you.
But I really think for any young investor listening to this is they'll make sense out of it because they feel the same way. I'm holding these forever. No stop losses, options. This is a long-term gain. When you're 50, 60, you want to have a massive portfolio where you're just earning whatever returns, 7, 8, 9, 8%. People don't know 8% returns, Joe, have been earned. If you bought the S&P 500 in the 50s, when it first became 500 companies, annually, those returns with dividends are 8%. That is unbelievable. You try putting 20 grand or 10 grand and just put it in the compound calculator for 20, 30 years. How old are you?
I'm 21.
All right, 21. 30 years, 51. I'm 47. You're going to look like me, which is bad. That's going to be bad for you because you kind of look a little bit, you're going to look worse. But, that's the best way. And again, guys, if you want $1 Stock Club or you want to learn more, listen to the podcast. $1 Stock Club is on our website, curzioresearch.com. And again, that's where we take a pick from all the guests. And Joe, I want to thank you for coming on. Thank you so much, bud.
Thank you, yeah.
Great stuff. And speaking of guests, let's move on to my interview with my buddy Frank Holmes, who's the founder of US Global Investors, where he launched a bunch of ETFs, mutual funds, great ETFs, Jets, largest airline ETF in the world. Amazing how big it's gotten. And, he's going to come on and talk about the travel-related stocks. Gold is another ETF that, which went public about 3 years ago in New York Stock Exchange. I happened to be in New York City at the time, traveling. Frank said, why don't you come by for our ceremony? And I wound up ringing the bell with his team at the New York Stock Exchange. Amazing experience I'll never forget. Frank's also non-executive chairman of Hive Technologies. They're one of the largest crypto miners, operations in Canada, Iceland, Sweden. His company mines for Bitcoin, Ethereum. Just reported earnings, record profits, pretty obvious with everything going up in crypto right now. Record cash flow, record sales, everything. He's a guy that looks at analytics and does tons and tons of research, willing to change his mind on a dime. I love Frank. He's not your typical resource guy where he invests in gold. He's cryptos, Bitcoin, and also ETFs and travel-related stocks. So we're going to have a lot of fun with this talk. His page views are going through the roof because he's been everywhere lately. I'm very excited to have him on. Guys, get your pen and paper out because you're going to have lots of ideas. And of course, I'm going to take one of those ideas, which no one knows which idea that is, and put in Dollar Stock Club. But let's get to my interview with Frank right now. Frank Holmes, thanks so much for joining us on Wall Street Unplugged again.
Great to be with you, Frank and Frank show.
The Frank and Frank show, you guys. So, I mean, you are in the perfect industry right now, right? I mean, you got the travel-related stock with the Jets ETF. Gold, I think, is fantastic right now. It has sold off, one of the cheap sectors around. I think, with everything going on, we'll talk about gold later. But more important is Hive Technologies, right? Which you are non-executive chairman, I believe, for Hive Technologies. And you have been involved in crypto for a long time, which is awesome. And even taught me a lot about this. And we talk about, 3, 4, 5 years now, probably even longer. But talk about Hive Technologies for people who are learning about the first time, because you just reported numbers, blowout numbers, record everything, income, cash flow. It'd be really great numbers. Explain exactly what that is to someone who's just, learning about crypto, which, my file's pretty, smart about crypto because we have our own security token for Curzio research. But just talk a little bit about this and get more familiar with the mining process.
Well, what happened in the mining business, I tried to launch an ETF in Bitcoin, and I quickly realized, due to concerns on anti-money laundering laws and KYC, know your customer, the SEC was not going to let it happen. And so then I went and got involved in launching the first crypto mining company, mining on an industrial scale. First was Ethereum, which is the second biggest currency in the world. And first was, and the biggest, is everyone knows, is Bitcoin. And what happens for those that don't understand that the business is that, and for Bitcoin is simple. Every 10 minutes, you can think of a drop puck, and it's so competitive that the fastest computers run in to try to validate 64 digits to say that this is a good transaction. And if you're the winner, you get brand new, fresh Bitcoins, virgin Bitcoins. So therefore, I would never have a money laundering concern because I'm the creator of all new coins. And the same thing happens with Ethereum. Ethereum's time cycle is much shorter than 10 minutes, and the numbers are bigger. So that's what we got into, like mining gold or mining silver. That's why I like to look at it. And when you're mining Ethereum, you're like a silver miner. And Ethereum has more volatility than Bitcoin. And it has been a spectacular run last year. Bitcoin was up 300%. Ethereum was up 470%. And Hive, because it's the only one mining Ethereum and Bitcoin, we were up 2,500%. And it's now being validated. We came up with our 9-month earnings, and we are the most profitable of all the crypto mining companies with the least amount of dilution of shares, and internally the most profitable.
Now, there was some concerns on your call that everybody knows, right? They're all talking about it. They talk about gas fees for Ethereum have skyrocketed, so they're looking for alternatives. But you have Ethereum 2.0 coming out, which is probably going to be rolled out in the next, if I'd say 18 months, 24 months. But they see the problem in addressing it. You address that. And also, mining is a capital-intense business because it's not the easiest thing to scale unless you have access to low electricity forever. But you have to buy more computers, more systems, more ant miners, whatever it is, to mine this stuff. And I know that you need the fastest chips in that. We're seeing a chip supply shortage, but you say you were able to upgrade 60% of your mining equipment. How are you dealing with those headwinds? Because I love the fact that you're addressing them when you see them in front of you, you know how to address them, but they are serious concerns, right?
Well, the big concern with COVID is just logistics and the battle with China in the U.S. right now. If you're shipping things in by ship, the shipping container rates have gone from 2,000 to 7,000, and it takes a month to get your stuff unloaded. And the rentals now have gone from, say, $1,000 to $12,000 for a monthly container rental. It's very, very expensive. And the times of delay. So we are experiencing that. And we did tell the shareholders, sending chips over to China, upgrading them, send them back, reloading them. There's just lots of delays and disappointments. And I don't think it's going to go away. We saw this with jets. What happened when you think of the crisis of a year ago on April the 15th, less than 90,000 people flew in the world. And the busiest airport in the world was Anchorage. Because it was moving medical equipment from Asia over to Europe and the U.S. So with that, now airlines has boomed back, but still the logistics is a long way to go. And I think the cargo airlines are making a ton of money. Airlines themselves are trying to put as much cargo can underneath because the rates are so great. And so we are experiencing that. But we have been able to get equipment. Relationships are so important, Frank. Just like the two of us, we have a good long-term trust, and that relationship is important. And the trust factor, the same thing happens with getting stuff from China. And on my hours, I get up at 3:30 in the morning because I'm going to be phoning Europe, and I can hook in with China, being able to make sure we're getting the equipment. A lot of the bigger companies that like market caps are riot. They've gone from 25 million shares to 75 million shares in 1 year. And with all that cash they've raised, they've gone out and bought all of Bitmain. And then same thing has happened with Marathon. It's gone from 10 million shares out to 80 million shares. Unbelievable dilution, but they've tied up all the equipment. And now there's a shortage of these basic GPU chips because of COVID. All these kids stuck at home are playing games, or they're learning, buying their iPad. G5 is being rolled out, the car industry. So we're seeing that this whole year of 21 going into 22, there's going to be a chip shortage. And so if you don't get your chips on, you don't get your equipment on time, then that'll be a problem. And we feel very comfortable where we are today. We'd expect it to be by the end of February, 100%, but it's just the ongoing delays that we're over 65% and we'll get to 100 of that upgrading. But we're able to buy new equipment. It's being delivered. We wanted to diversify the risk. We didn't want to have just Bitmain because we found last year Bitmain was slow in delivery. So we wanted to diversify what we're doing. The same thing in running the business. We're mining Ethereum in Sweden and Iceland, but the big Bitcoin operations are expanding in La Chute, Quebec, which we bought last year. And now we have in Grand Falls, New Brunswick, 50 new megawatt facility. We own the land. It's going to be a balance sheet item, which is great for us. But we're going to expand that to 60 megawatts, and we're going to be mining Bitcoin there. So we have the electricity. We have inexpensive electricity, and we have only green energy, where some of these other companies are using coal in Montana to mining, and there's a big backlash now in China over using coal. I think it's a perfect storm that we can see Bitcoin have a huge rally, even greater than what we're seeing, because there's no equipment. Unless you secure the equipment or you secure cheap electricity, if they shut down China, in Inner Mongolia, the Chinese are already looking in America. They're looking in Europe. There's no other source of power. They're not going to get it. So we're going to have that perfect storm of where there's supply restrictions like you've seen in the copper market, and copper goes to 8-year high because demand is picking up. And we're going to see demand for Bitcoin, Ethereum, but the supply of it is going to shrink.
I love this, Frank. You're all fired up today. I like it. So there's one more thing I think that creates a big competitive advantage for you guys is just, Canada, Sweden, Iceland. You talked about that, right? About those areas of where you operate in. But now we're seeing environmentalists come out. You dealt with them when it comes to mining and how difficult they can make things. A lot of it's political. But now you're seeing them come out and say how much electricity that the mining uses for Bitcoin, Ethereum, whatever. But you are using alternative renewable energy, right? Talk about that. I think that creates a massive competitive advantage for you guys, at least over your competitors. But I want to hear from you. How big is that? Is that significant? Are you hearing that from maybe investors or from shareholders saying, hey, you need to be into renewable energies, and because a lot of companies are basically forcing their issues based on environmental concerns right now?
Well, we have a very strong understanding, and being a fund manager, of seeing that paradigm shift take place in the capital markets of the operative words ESG. We have, I think, the strongest leadership and positioning and having an ESG footprint. What we've done in the boating community in Sweden, what we'll be doing in New Brunswick, it's important in that community, and we will only deal in green energy. We've had some other opportunities come to us, but we've just backed away because it's not green. And so that will be a key focus going down the road. And also community involvement and giving back. So there's education in Bowdoin for the gaming and coding, helping young kids so that they can learn and get a career path in coding. The biggest sport there is hockey. So the kids that can't afford to go, that we make sure we have our own section, that we get tickets for all these kids so they can be involved with it. So that's our sort of community footprint. So I'm coming back on what's happening in Argentina is currency controls. So places like Venezuela, the only way to get money out, and what I've learned is these ATM machines that are out there where you can buy Bitcoin or upload and get your Bitcoin out and convert. That is basically in Miami, in Orlando, Florida. There's lots of machines because of all the Brazilians, the Venezuelans, and Argentines because of bad governments. And in Europe, you're seeing it in London because of all the bad governments in Africa. So there's a currency destruction in these other countries. Intelligent, rational people are saying, how do I protect what I have? If I don't own gold, what do I do to protect? And so the fastest way in the digital world is to make sure you own some Bitcoin. And more sophisticated are going for the smart contract of Ethereum. Now, I forgot something that's really important in Ethereum. I have been hearing about Ethereum 2.0 since I first launched Hive Blockchain. And it's always this big bad boogeyman. It just started in December, a couple months ago. And all it did was take $5 billion of inventory out. So actually it's shrinking supply. And people are earning an income on that yield, but those coins are not going to come back in the system. So if you have the rise in stable coins by JP Morgan banks and other banks copying JP Morgan, and you have DeFi exploding, the use for Ethereum is also going up exponentially. So that makes that the supply side is being constricted, demand is picking up. I think Ethereum is going to outperform Bitcoin again this year.
No, that's great stuff. And you know, I'm going to bring this up here with the Hive blockchain here and just show you. And I know you wanted me to talk about one thing right here. So Ethereum mining revenue, and just to show the numbers here. And I've been part of this journey the whole entire time. I'm still a shareholder in this company, but talk a little bit about this here, the miner revenue monthly, how, you know, it's exploding. And guys, this is where Bitcoin is. Say it's a 50,000 today. It could be, by the time you listen to this, we're going to publish this 3 hours later. It could be 40,000 or 60,000, who knows? But talk a little bit about this, because if you're a real believer that Bitcoin's going higher, Ethereum's going higher, I mean, this line right here, you know, at the right is going to go a lot higher as well, right?
Absolutely. And the transaction fees, they're just big bonuses for us. And you can have access to new chips. We're securing and procuring, and we've secured now more and more chips so that we can go and increase our footprint to 30 megawatts of mining Ethereum. And so I just think it's a very bullish scenario for us. We're the only crypto mining company offering two. And we keep these coins on our balance sheet in addition to selling some to pay for electricity. But this year, we've done nothing but build our inventory again. We had to use sales coins last year to buy all this new equipment. Now we're just replenishing it, and it's all working out perfectly for us. What's also interesting, Frank, is that a lot of these other companies, they've diluted their shares so much that even when they turn on with their production later this year, on a per share basis, they really are not going to have big numbers. It's been massively dilutive.
No, it's interesting. It's interesting. So before we go here, because great of Ethereum, of Hive, you also might for Bitcoin. I want to talk to you about Bitcoin. You know, you have your pulse on institutional investors. We're seeing Goldman Sachs now getting into it more after saying they're not getting into custody and trading and stuff like that. We've seen some of the top hedge fund managers in the world, the Ray Dalios, Drunken Millers, Paul Tudor Jones, like change their mind on this after they saw it. And I don't know if it's the common sense where we're a digital world now, so a digital currency makes sense. But where do you see this ending up with Tesla? You have buying it from the cash balances. A lot of companies, you look at Square, 5% of its cash, you know, the balance sheet is in Bitcoin. And then you look at a company like BlackRock, who said they're exploring it, who now we're talking a $9 trillion in assets under management. I mean, if they just go 1%, even, you know, 0.5% of that, you know, you look at $45 billion flowing into into Bitcoin. But where do you see this in terms of the institutional adoption? Is this for real? Do you think it's going a lot higher? I just want to get your thoughts on Bitcoin here.
Well, it's called Metcalfe's Law, Frank. Metcalfe's Law is the best way to explain the exponential growth of what can take place. Remember that supply, if you have the supply of gold production, 100 million ounces a year went to 50 million ounces, gold would be 10,000. And what happened last year is that Bitcoin supply every 10 minutes halved. And there's more wallets that people are buying, and they can buy fractals. If you open an account at Robinhood or even a PayPal account, you can buy Bitcoin, and you can buy a fraction of that coin. So as more people open wallets and buy these fractals, therefore it has this exponential torque on the upside. And that is really key for it. Now, institutionally, your hedge fund question is the growth of the CME. So we've seen this massive growth in the past since February the 8th, when Ethereum started trading, of institutions buying Ethereum. Last year, when the hedge funds started buying, they didn't go buy Bitcoin and put it into a wallet. They went and used the futures market. Now, there's no leverage with the futures market. It's 100% cash trade, but it's become the proxy and the easiest and cleanest way from an accounting point of view to get a position in it. And what we're seeing with Hive is that Hive is a proxy for those that are afraid or reluctant to go and open an account and exchange and buy Bitcoin or Ethereum. They use Hive as a proxy. And we can see, like yesterday, Hive was up, Bitcoin, Ethereum rolled over, and by the hour, all of a sudden we roll over. We're having 100% correlation for the past 6 months, and you can see it by the hour. So hedge funds are using, in the quant world, using Hive as a proxy for that. That, to me, is just great liquidity. It provides two-way markets, and it creates this growth. The biggest question yesterday on the webcast, which blew me away, we announced it in 24 hours, and 1,500 people came on that webcast. And I received hundreds of questions. But the biggest question was, when are we going to go on NASDAQ? Well, it's a two-part step process. And first of all, you have to register and file with the SEC, as you know, and you have to do a 20F filing. And that 20F filing allows you then to go and apply for either NASDAQ or New York Stock Exchange. I have companies listed and on NASDAQ, and Jets and GoAU is listed on New York Stock Exchange. So we haven't come to that final conclusion, and we really can't say anything is promissory, but we are set up the process for filling out those registration documents and fast tracking for Hive to become listed in the US, and then for Hive to be listed in Asia.
It's all great stuff all around. Really, really exciting stuff, Frank. And just to see how this company grew and being there from the beginning, it's amazing, right? It's amazing. It's in the right trend. It's fantastic. Now, you're one of the few people that own gold and Bitcoin, which, I own gold and Bitcoin as well, but a lot of people say either or. Are you worried about the younger generation of investors? So these are people basically looking at gold as a boring asset, that they see Bitcoin as a better alternative, maybe to hedge against inflation, or even a store value against governments recklessly spending money and going crazy. But does that concern you? Because again, it's all about like the next generation, and it just seems like the next generation is growing up where Bitcoin is more of that alternative than gold, where gold seems a little bit more boring. Do you think it's going to have an influence on gold? I mean, maybe it has the influence on gold because we're seeing Bitcoin rise. Money, institutional flows are coming out of gold a little bit, which, you probably see them come in because it's cheap here. But I just want to get your thoughts on that, because one thing I really, really love about you is you always surround yourself with young, energetic people who you work with, who you hire, and just brings out the energy in you. You see it in brilliant kids and brilliant people. But I want to get your thoughts on it, because is that a serious concern, or is it something that, hey, maybe they'll come around to gold sooner or later?
I don't think so. There's a classic example. Last week, we had a huge power rolling shortage and freezing weather here in Texas. No power, no heat, no Bitcoin. And that's a real important reality. You need electricity for it to function. And so that's a big limitation. But I think what we have to recognize is a lot of these millennials and Generation X, they all went to GameStop. They all bought the software. They all play gaming, and they know if they're really good, they get a cryptocurrency in that game, and then they can upgrade and upgrade. So the most elite game players are always able to use a digital money form to buy more than that. They don't have to use their own US dollars or their euros or Japanese yen. The game is their currency. So they really relate to a GameStop story. They really relate to digital money and the growth in digital wallets. So I think that that's what's really significant that we're going to see. And the whole thing of millennials and Robinhood going into GameStop, well, all these kids traded game. They all went there. So it's easy for them to buy in Peter Lynch's model. You should invest or trade what you know and what you use. But what I think is going to happen is that gold is the fourth most liquid asset class in the world. Silver is not in central banks, it's gold. The storage is a lot less, it has a value. But 60% of the demand for gold is love, that great love trade. And China and India is 40% of the world's population, and the rising GDP per capita there means they're consuming more gold. In the past 30 years, China and India, affectionately known as India, we're consuming 10% of the world's gold, and now it's pushing 60%. So I don't think that that is going away. And the other 40% is fear, and that's speculative or just money printing. So central banks will be the big player there. And then we'll get back into gold has been up 80% of the time in the past 20 years, 80% of the time. Mm-hmm. Last year was another stellar performer, outperformed the S&P. In fact, for the past 20 years, gold has outperformed the S&P 250%. I mean, that's just mind-boggling data point. And so I don't think gold's all going to be vaporized. I just think it's going to go through this evolution of being a core asset, 10 to 20% of a portfolio, to rebalance, because the G20 finance ministers, and in particular central bankers, are all hooked on the dopamine rush from MMT. Not, that's the new drug, MMT, modern monetary theory, approaching by giving out money here and there and whatever socially they think is best way to do it. This money printing just creates a greater value for hard assets, and gold will always have a role that way. Now, speculative and being disruptive is Bitcoin and blockchain in particular. So that's why we have companies like we own Abix, which with Robert Freeland is a big investment, because they're going to do LNG hedging with blockchain in Singapore. And LNG is the biggest form of transformation of energy. If you look at Kathy Woodson, what she talks about at her ARC funds, the ETFs that have spectacular growth. I'm talking about 3 billion to 15 billion to 60 billion this year. She's investing in a big, and it looks like blockchain as being a very significant, and Bitcoin is a subset of that. So I remain very bullish on these asset classes. And the last thing to tell you about, Tesla is more volatile than Bitcoin.
Yes. And you're talking from analytical perspective as a fact, right? Just say
Absolutely. And so it's okay for Tesla to put it on their balance sheet, because it is a disruptive company buying a disruptive. But I don't think it'll go well with Coca-Cola buying it. I don't think it's going to go well with General Motors buying it. These are not respected disruptive industries. And so that's the big game changer that I see. And the SEC will probably come after other companies if they started speculating, just like years ago, back in 1980, if you put gold in your balance sheet for speculating as a public company, the regulators would seem to get upset about it.
No. All right. So we're going to stay. It makes sense. I'm going to stay on this crypto topic just for another minute, because I'm going to ask you, right now you talk about Ethereum, you talk about, Bitcoin. Is there any other cryptocurrencies that you're looking into through Hive? Maybe it's Cardano, Bitcoin. You have Bitcoin, you have Stellar, you have Litecoin. Some of these others, their market caps are growing tremendously. But are you looking at those? Any of those that you like, or is it just kind of, hey, I'm sticking with Ethereum? Yeah.
No, we mine the other ones. There's a time when you mine them. But what we found is that if we even put 20% of our capacity to mine Ethereum Classic, all of a sudden we're 40% of its volume. So that's very dangerous. You don't want to be over 50%. So we've got to be really careful when we go to these other coins, because we are a whale. We're not a minnow. We're a whale. And so when it comes to Ethereum and these other smaller coins, if we turn 10 megawatts onto these with our technology and the quality of our GPUs, so it's very fragile.
So let's talk about and move on from this, right? So let's talk, because I love the crypto argument. Everybody's so concerned about, could they getting emails like crazy now. So I'm glad we stayed on that for a little bit. But I want to talk about travel related stocks. You created Jets, JETS, which is the largest airline ETF. I want to get your thoughts. You're someone who follows these trends tremendously. I'm a big believer that we are going to see an explosion, absolute explosion in travel that's not being priced in right now. People are dying to get out. It's going to be hard to get hotels soon. You live in Texas, just open up 100%. I think we're going to see Florida next. We're going to see more states open up, and hopefully as the vaccine gets distributed, which gets distributed very, very quickly here and globally, people are going to feel more comfortable. But talk about ATF, because what is it like? It's huge now. It's monstrous, right? We talked about it when Buffett, remember back when Buffett bought it, and then when he decided, and we both thought it was the greatest buying opportunity ever when he got rid of him. Like, man, it's crazy. And sure enough, this thing's through the roof now, right?
Frank, it was a year ago this time. I had to lay off people. The assets had collapsed. And all of a sudden, Jets goes from just under 100 million to 35 million. And in comes the minnows coming through the Robin Hoods. And during that whole period of March, April, and May, 25,000 Robinhood, because you could get the data back then, minnows came in. And as the minnows came in for an ecosystem and you have price discovery, in came bigger, came in the tunas and came the groupers and came then the barracudas and the sharks and all of a sudden the whales. And it started to grow in volume, and the more it grew, and then a bigger account. So now it trades over 3 million shares a day, and it's over $3 billion. And what the kids did their analysis on, and I believe they're much more sophisticated than my age in the 90s when baby boomers discovered mutual funds and stocks. This new generation is much more sophisticated using the internet to get data. And they said that every time there's a big crisis globally, airlines take it on the chin. They drop 70%. A year later, they're up 80 to 120%. So you saw this sort of speculation. Buffett gets out, and immediately a week later, they take off. And those kids, the 25,000 that were early, are up over 60% on their money. So I don't think they're that dumb. And I have a complete different narrative on price discovery because I'm a big believer it's really helped the ecosystem. It's helped the SPAC market. So there's many different forms of capital being created today, which is very exciting because it gives a little investor the opportunity to make big money. And a lot of them are going to your podcast, going to YouTube. And that's how they're learning about stocks and ideas. So it is a very new generation. The airlines industry is adapted. Business travel is not going to be booming right away because of Zoom. But tourism, yes. And we're seeing it. Southwest Airlines started a nonstop from Phoenix down to Cabo San Lucas. You're seeing from smaller cities in New York and Pennsylvania going down to Florida, not going through the big hubs. They're using AI to adapt and to adjust. The airplanes are cleaner, spotter. I think going forward, it's going to be a lot safer and cleaner to travel. I've not had a cold for a whole year because I've not been flying. That's a big benefit. So now I think these airplanes are going to be spotlessly clean, which will help the tourist boom. And now the TSA publishes every day how many people they clear. Very, very important data point because the airlines Jets ETF is following it. And what we saw was that the airlines, whereas 2.7 million people a year were flying, 2 million Americans were flying every day, 700,000 coming from Asia, Europe, and Latin America, and TSA would screen. Now that number fell to 90,000, and then it climbed to 1.3 million. And then it went back down to 1 million. So what you're seeing is that the application of a 50-day moving average is being applied to this data point, and speculation comes into trading jets with that. And the airlines themselves are adapting, adjusting to tourist travel. So Kevin O'Leary said he's shorting jets. Well, good luck. If the economy is that ever bad advice, in my opinion, and he's a great guy, but that's shorting it. I think that people can't wait, like you said, to travel.
Yeah, people are dying to travel. And just to show you guys here, this is incredible, Frank. I got to show people this 3.8 billion, man. That's amazing. I mean, to put that in perspective, where was this number, Frank? Where was this number, like, say, 5 years ago, 10 years ago? And just, I mean, it's incredible.
Well, we launched it 6 years ago. It was launched 6 years ago, and it went up to 100 million. And this time last year was like 75 million, and it fell in March to 35 million. And then in came the speculative investors that had great rational reasons, and they were quite accurate.
That's great. That's unbelievable.
And that's where it's all kept in my company, which is trades on NASDAQ, US Global, GROW. And it has been a recipient, and it's had spectacular growth in revenue and earnings because of the unprecedented success of jets. But Frank, jets took 5 years. You and I first met, we were going to the Boeing facility up in Seattle.
That's great.
And people don't realize it cost me $5 million, $1 million a year to put that out, do the information, the education, and then it takes off. And so I'm very thrilled about it, but it's 5 years and then it's overnight success.
That was some trip. That was awesome. That was a while ago, maybe 2017, maybe 16, I forget. But we went to the Boeing facility. Guys, Everett, Washington, definitely go. Unbelievable. I mean, we saw the rollout of the MAX, and we all know what happened now, but now it's back on track. And yeah, it's just pretty incredible with everything that's going on. So really exciting stuff for you all around. And I want to give you a chance to talk a little bit about your your blog. So you write, I don't know how you have time to write, but it's a blog that you have in the U.S. Global Investors website, and it's right here. And, it's cool because you get perspective, and it seems like it gives you a chance to talk about whatever's really on your mind, what's going on, economy, different sectors, different stocks. So, talk about that, Frank talking. It seems like you really like doing that.
The big thing that's interesting for me is that the 10-year government bond, I always use a quant approach to trading. And I like to look at the trend is your friend, moving averages, but what is a sigmas? And looking at what is this percentage change of a sigma for each asset class has a different DNA of volatility. But the 10-year government bond, going back 10 years, its price yield has appreciated so fast, so quickly that it's up 2.5 sigma. Well, that just says mathematically over the next 60 days, we could have a correction that it goes back to the mean. It's not going to go back to 50 basis points, but that correction would all of a sudden propel gold and will propel digital currencies, et cetera, and the stock market. So that's the most recent story. But what I have is I have great research people. And what I tried to do was create this blog for the shareholders, and it grew from there. So every week, the portfolio managers have to write 3 strengths and weaknesses that happened this past week that impacted gold or China region or Eastern Europe region or global resources, and luxury goods were the only luxury goods mutual fund. And then what are the 3 opportunities or strengths that can come next week? So what data points coming out? Is it PMI? Is it GDP? Is it some economic data point that can have ramifications? So that's what they help me, and they put all that stuff together. And then the marketing team puts lipstick on it, make sure it's all in compliance. And I give the thesis of where I think I want to comment. So I was looking at my sigmas for crypto, and then looking at 10-year government bond. And that the story last week was we're basically an overbought on yields, and mathematically odds favor a correction in this surge in yields.
No, that's cool. I love the blog. I get it emailed directly to me. It's really cool, guys. You go check it out. You share the website, and we'll provide links and everything for our podcast. I guess the last thing here, Frank, is I like to have a little fun where, you love to exercise. You jog every day. I'm not going to say you love to say how old you are on your Twitter page. Some people, I never worry about age. I never think that's a reflection of how old you are. It's how you feel. But how many miles do you jog a day? I'm curious.
I try to do it by the week. It's more like counting a week. Can I run a marathon a week is my goal. So that's basically, can you run 5 miles a day? If you're just going to run from Monday to Friday, it's going to be 6 miles a day. That's the goal. And I turned 66 on the weekend.
No, that's, wow, young. So, Frank, you're very good.
I run slow.
Listen, you're running. That doesn't matter.
9-minute miles have stretched up to 12-minute miles.
That's great stuff. Well, frankly, I mean, you're a good friend. I love having you on. I always learn something. My guests always learn something. From my guests, but I know my audience always learns a lot from you. You always share ideas with us, which are filled through your funds and everything. So I just want to say thank you so much for coming on. That my audience loves you. It's an open invite whenever you want to come on. And congratulations on your success, because, I know how hard you work. I know you're out there, even at your age, you're out there on field trips that I've been on, which is awesome to see. You can still see the passion. And, just with Jets doing well and Hive doing well, everything seems to be coming together. And I think we both agree that gold's going to be doing well. So I just want to say congratulations on all your success, and thank you so much for coming on.
Well, it's great being with you, and you're filled with optimism, and that's so important to investing, Frank, because there's always so much gloom and doom. And I try to tell people, if there's a hurricane, then get the house builder stocks. Don't get the insurance stocks. Just think this way. Yeah. And during Obama's era, everyone was Obamacare. It's bad. If you look at the healthcare stocks, they had a 45% CAGR for those 8-year period. I mean, unbelievable. So whatever negative is positive, and that's what you do, Frank. And that's why I think your program is spectacular. You look at the glasses half full.
Thank you so much. I really appreciate those kind words. And of course, hopefully you'll come back on really, really soon.
Thank you.
All right, guys. So great stuff from Frank. I love having him on. And he's a really good friend. He's a great guy. He's a hard worker. He cares about the investors. He has a great track record. He's been in the resource industry for a long time. Created Go Gold, which, don't ever buy any alternative at an ETF in gold, because that's, outperforming all the major ETFs, but in the gold space. But, when it comes to Frank, it's just, I said it earlier, surround himself with younger people. He's always looking to get better. He looks at data analytics, and just to see his success. I mean, I'm a guy that loves to see people succeed. I love it. A lot of people don't like that for some reason. They get jealous or whatever. For example, Stansberry through, it's called Beacon now. Beacon Street just got bought out by a SPAC, not bought out, but merged, and it's a $3 billion transaction. And I'm happy for those guys. Good for them. It's awesome. It's great for us, right? We're in token now. We have a comparison. We have someone who's a monster in the market that offers a lot of different things for us. That's really exciting, but I love to see people successful, because even a guy like Amir Adnani, who, I've seen him personally working his ass off, traveling the world, working unbelievable hours. And when you do that, you sacrifice a lot of things. Sometimes you might not see your family as much, and sucks, but, you're thinking long-term and trying to establish, just build a great foundation for them where, hopefully they don't have to worry about a lot of things. And he was in uranium and he was in gold. And it was a 5-6 year stretch. Uranium was like 7-8 years. It's been horrible. And now just to see his gold mining stock went through the roof, and then, it pulled back along with other gold stocks, but now he's spinning off the gold royalty company and through that. And now to see, UEC doing well and uranium royalty, Frank, I put in the same class, just really, really great, hardworking people that I trust, that have given my investors great advice. And I'm just so happy he came in the podcast. Definitely check out his stuff, Frank Talk. I try to provide free sites for you all the time, even our sites as well. I try to provide as much free. You can listen to this on a Curzio Research YouTube page absolutely for free. Subscribe to it. Where you can see the actual video of Frank and I. He's funny because he's animated, and he's just great. He's just full of energy. And also through iTunes, and also free products that we have here that you guys would definitely check out and learn more about the markets, learn more about everything, and most important, learn about Frank, which you can by going to his US Global site. So I say this all the time after my interviews, guys. This podcast is about you. It's not about me. So let me know what you thought. Right? I loved it, but let me know what you thought of that interview. FrankCurzioResearch.com. That's Frank at CurzioResearch.com. Now, let's move on to the market and the topic, everything going on in the markets, right? I'm going to bring in the greatest, the tallest, best-looking, awesome golfer, member of the Curzio Research team, senior analyst, Daniel Creech. What's going on, buddy?
Man, how about that intro? Yeah. Awesome to be here as always. Happy Wednesday, everybody.
Now, Daniel, how tall are you? Because my thought is, my daughters really think that you're a giant. And it's ingrained in their head to where wherever I go, if there's like a doorway they're like, Daniel would never fit through that. It's just all the time. And my youngest is always like animated with stuff like this, and she's pretty funny. And my youngest is really, really, crazy.
Yeah, she cracks me up because every time I walk through the doorway to say hello, they're always like, "Whoa!" Looking at me like, "Are you gonna hit your head?" No, I'm right at like 6'6". So
6'6", man. I tell you, my youngest is really like in love with Daniel and just like fascinated. He's so big, but she's really crazy because she had a fight with my wife the other day, and I'm minding my own business. I'm staying out of it, right? I'm like, I'm not going to get involved. And it's like 8:00 at night. And I tell you, girl forgets that she has a spelling test. So my wife has to help her out with that. And she gets pissed off because we want her to relax and everything. She says, you need to be organized. And so my wife says, you know what? You deserve an F. You need responsibility. You deserve an F. You know what she says? My daughter says, yup, that's an F for fantastic. I'm like, man, just a fresh one, right? If I would get a fresh one, you used to do that back in the day. Now you're not allowed to, but holy cow. Yep. She's funny, and she's rough, but she really likes you, Dan. So anyway, I want to get to a lot of things going on. First thing is you just came back. You went on a trip to Ohio. Happy birthday to your grandma.
Yep. I was
80 years old, right?
It was a half of a surprise party. Yeah, I was kind of more of a decoy. They knew I was coming in. Yeah, and she turned 80. That was a lot of fun. We went out to dinner. And then flying is unique right now because I have a public service announcement, by the way. There's millions of you out there like this, and I'm looking out for everybody. So if you're like me, you're a little bit teeny tiny, itsy bitsy nervous about flying the friendly skies, and the only solution is the taste and the feel of an adult beverage. You got to be careful who you fly. So I took American up to Ohio, went through Charlotte, and then coming back out of Ohio, I stopped in Atlanta and I was on Delta. American, you can order cocktails. Delta does not serve alcohol at all, not even to first class. Now, They walk through. American, you got to buzz them or ding them or what is that? Flight call. Mm-hmm. You got to ask for it. Delta goes by everybody and gives them this plastic bag with a little bottle of water, a hand sanitizer, grain bar, whatever. But yeah, so all you out there that are nervous, be careful booking on Delta because you're going to be dry.
And you flew first class on Delta.
I didn't fly first class coming back. I did treat my. They're going to think you pay me too much, Frank. Don't say
I was going to
stuff
say,
like that.
man, you must.
No, well, I got a
pretty
cheap
good at your
ticket.
job, man. You're a cool
Yeah,
employee right
I
here.
did take American because, as you let in with, I'm so damn tall and I'm uncomfortable on airplanes. Yeah. So I did do that. But yeah, coming back, I was in Delta Comfort, but I even asked, I said, hey, can I pay for a drink? I hate to be that guy. She says, we don't even serve them in first class. And I thought, wow, glad I didn't spend the cash then. So yeah, just a heads up. But real quick on the, I followed a gentleman off the plane. I forget where I was. And to the credit of the airlines and all the workers there, my heart goes out to them. They're very good. They were all very nice, even if when they have to threaten you on federal and civil, and you may not ever be allowed to fly again if you take your mask off, other than eating or drinking. Mm-hmm. They have hand sanitizers everywhere. Like when you walk out of the bathroom, when you walk by a drinking fountain, when you get on your airplane, when you're coming off your airplane, obviously you use the same thing. Mm-hmm. I followed a guy off the airplane, and we must have passed 5 different hand sanitizers, and that guy stuck his hand out and hit every single one of them. And I'm thinking, pal, I wanted to take my mask down and be like, hey, there's no way the last 100 yards got you. Anyway, moving on. But yeah, it was a great trip. Great to be back as always. And yeah, we're rocking and rolling now.
Now talk about your trip, because you're. I don't know if this is a good thing or a bad thing, and I'm sorry if I condition you like this. But whenever I go on trips, I'm talking to cab drivers. I'm looking for ideas. I'm looking at everything. I'm just. It's almost like when I became a licensed referee in basketball. You look at the game differently. You look at it from angles, and you're not really enjoying the game as much because you're looking at it from a perspective of what they're doing wrong or whatever.
That's a good point.
You brought you highlighted a couple of pretty cool things that you saw, but yeah, why don't you tell everybody, because you came back a couple of really good stories.
Yeah, I didn't. I was bumming a car, so I didn't talk to. And I'm going to a small rural town, so there's no cab drivers there. But just meeting and greeting people. Obviously, I do boots on the ground research at dive bars, so I got to get foot traffic numbers and all that kind of thing. Very informative. But yeah, when we went out, so I picked up food a few times, brought it back. We went out to dinner. Places are packed. You've been beating this drum for a good while now. People are dying to get out. Anytime there's live music, it is damn near shoulder to shoulder. A lot of people are still canceling because of whatever reason. I'm not really sure if it's more of an Ohio mandate or whatnot. But people are everywhere. And the other thing is that people are already looking forward to this stimulus check the stimulus bill that's getting debated right now in the Senate. Or I believe it could start as early tomorrow for debate in the Senate. And the headline just before I came on with you, Frank, is that they're going to, everybody gets $1,400 under $75,000 a year for individuals. And then I believe it phases out at 80. So if you make over 80, you're not getting anything as a single. Obviously that jumps up for 2 incomes and things like that. But when you look at how crowded things are, and I mean, I know a lot of people that make good money right around 70, 80, 6 figures that have a few kids. They're going to, and they were kind of joking like, man, I'm going to get, if that passes, we'd get these. And then on top of tax returns. So you talk about people being flush with cash, and it's brilliant political timing. You're going to have a tax refund hit you, and then you're going to have $1,400, and then plus whatever number happens on per child. That is serious right there for what's coming in the next 2 quarters of the stocks.
I mean, I could attest to this in New York. If you live in the 5 boroughs and you're making $150,000 like as a family income, you can't survive. I mean, the home prices alone, your mortgage,
wild.
the taxes. I mean, the taxes are just like insane in certainly in these areas. And if you're going to go more into New York City, it's even more expensive. I don't know how expensive it is now with everything going on. But it's a shame because, you would think like there's somebody like in maybe the Midwest, right, that might say, wow, 60, 70 grand, and that's great for the economy, for where that person lives. But other places, you're not considered wealthy making $200,000.
Oh, no, not
and
at
having
all.
3 kids and having a house in Long Island and commuting 2 hours to work back and forth to New York City. Let me tell you something. You live in paycheck. I have so many of my friends that live in paycheck to paycheck. It sounds like a lot, sounds crazy. And now that's one of the things that everything opened up, which I like about, the one positive of COVID is if you don't have to go back in the office, what does that mean? Because that's why you go to major cities, right? They're going to offer you more income. But now you don't need that. And now even JP Morgan, I think, announced today and said, listen, we're going to, I don't know if they're closing their space in two major offices, but they're just not requiring as many people to work in the office anymore, which is fantastic because those commuting costs are amazing. And now it allows them to get up and move to a different state because I would tell you from my experience firsthand coming to Florida, you automatically get a raise. My house is 3 blocks away from the ocean, and I would say that, my taxes would be at least 10x higher if it was the same house in the same area, almost in any place, like just 3 blocks away from the ocean in New York. On the East Coast, northern East Coast, holy cow. And it's a big difference. And now at least that's going to give people options, right? So we'll see. But either way, like you said, the stimulus check is coming and people are going to be spending it. Where they're going to spend it, I think they're going to be spending on travel-related stuff, getting out. Everyone wants to get out. We saw Texas come out and say, 100% open and then also no mask mandate. So I think people are taking that, okay, nobody never has to wear a mask again. There really isn't. Like in Florida, there's a mandate. There's no mandate really in Florida, but you do go to certain businesses. Like Walmart will make an announcement over loudspeaker if a couple people aren't wearing masks, a couple places, but not everywhere. Like most places, it's optional. And some people already had it. Some are vaccinated. But I think you're going to see more states follow suit now that
let's hope so.
Distributed. So,
can you believe we're giving ourselves credit for getting really close to common sense? I mean,
well, don't give him credit yet. I mean,
I give Texas credit.
Newsom come out and just destroy the governor.
Hey, what's wrong with choice?
Of Texas.
Everybody always argues about choice for everything. Why not choice? You want to wear a mask? Hey, I'm all for it. But don't make everybody else wear one.
Yeah.
One more macro thing, even though total cost of living and difference from where I'm from and you're from, Frank, like you can get a house for $150,000, $200,000, a nice house, a nice ranch style house, whatever. From a macro level, though, it's on for a couple days on the market if you're lucky. I mean, houses are going like crazy, and that's just a rule. And, that's not because people are moving from California, New York to Ohio. That's just because of rates in general. It's cheaper to buy than rent in a lot of cases on a payment basis. And so that's something that's going to continue for a long time. It just shows you how bullishness housing in general is everywhere across the country.
No, it is. It really is insane. So, and I want to move on here because one of the things that we're talking about as well is earnings, right? It's earnings season. We have most of the companies reporting. And for me, I thought this is an interesting trend because even with Zoom, you see Zoom blow out the quarters, you see all the FANG stocks blow out the numbers. The analysts have been so dead wrong. And I wanted to really look into researching this part. And so, guys, this is one of the, I bring this up a lot. It's one of the best free sites. So if you go to, FactSet, I just type in FactSet in Google PDF earnings. And they produced this page right here, which I'm showing. Again, if you're watching this on video, the Curzio Research YouTube page, and it's a 31-page report, and they publish it, I would say, every 7 to 10 days, maybe. And they break down everything in here. So I'm wondering, what's going on with and one of the things I noticed is that it says 96% of the companies at S&P 500 reported actual results. 79% of S&P 500 companies have reported a positive earnings surprise. So if 79% is the final percentage, it will mark the third highest percent of S&P 500 companies reporting positive earnings per share numbers since FactSet began tracking this metric in 2008, right? So you're seeing positive earnings surprises, which is okay. It's a crazy market. People are coming back quicker in some areas than others. I get it. But then when I look at 9 sectors have higher earnings growth rates or smaller earnings declines today due to positive earnings per share surprises. 9 sectors. That's huge. That's a lot. So they talk about the 12-month PE ratio right now. It's 21.5, and that would be expensive if you're looking historically or whatever you look at. But to really put in perspective, you really have to compare because this time is different. People say it's not different. We have zero rates basically across the board, and you're throwing trillions into the market 21 times. Not really expensive, as crazy as that sounds. But more important here, Daniel, before I get you in here, this was a big thing I wanted to find. So second highest increase in S&P 500 earnings estimates since 2002, and this is for this quarter. So they say during the first 2 months of the quarter, analysts increased earnings estimates for companies at S&P 500 for the quarter. They increased it by 5%. Right? Now, what does that mean? Because they say, how significant is 5%? How's it increased compared to the past quarter? Well, during the past 5 years, the average decline in these earnings. So leading up to the quarter, usually analysts come out and they say, they lower those estimates a little bit. This time they raise them by 5%, right? So during the past 5 years, the average decline was 3.5%. Past 10 years, average decline is 3.2%. And the past 15 years, the average decline from these analysts, again, the first 2 months lead up to the core, they usually lower estimates by 3.8%. This core, they raise them by 5%. Now, what does that mean? It says the first quarter marked the second highest increase in bottom-up earnings per share estimates during the first 2 months of a quarter since FactSet began tracking this metric, and this goes back to 2002. I want to bring this all together before I bring you in because this is important to understand, guys. So analysts are raising their estimates by the largest amount almost than ever leading up to the quarters And these companies are still blowing out these estimates higher than, in the highest bracket percentile that you could possibly use. What does that tell you? It tells us that if you're looking at earnings for S&P 500, this is S&P 500 company earnings to talk about with FactSet, you're going to see an explosion here. I mean, these guys are ready. We're looking at economies that aren't even fully open, right? Or states that aren't fully, cities aren't fully open. Everything's going to be opening up, especially over the next 3 to 6 months as these COVID rates are declining. These plunging, hospitalization rates are plunging. Amazing. Great, great, great news. More people are going to go out, more people are going to spend, and you are going to see a surge in earnings. As earnings go higher, if the S&P 500 stays the same or goes, grows slower, goes up, slower than the earnings growth, the PE ratio goes down. So these stocks might not be 21 times earnings. So if S&P 500, let's say, just stays the same and these earnings rise a ton, you're going to see that PE ratio overall for S&P 500 come down, which I don't think is unexpected. And more important, what does this mean, Daniel? To me, it screams inflation. Inflation is going to be here. If these guys, analysts can't keep up with how fast these guys are growing earnings right now. They can't, right? Yeah. So it's pretty insane when you think about it, where it just looks at inflation, Bitcoin, you're wondering why it broke through 50 again, 50,000, gold, I think is a great, but, for me, when I look at earnings on the macro level, this is a pretty big deal. But again, you follow earnings, you track all the earnings reports for all the stocks in our portfolios and stuff. But I want to get your thoughts on it. And sorry I was so long-winded there. But
no, you're good. Yeah, we were joking about this yesterday. We're not out of the woods yet on earnings, but we didn't really have a company that dropped significantly. I mean, we had a couple biotech stocks be volatile, but hell, that's natural for those. So we were kind of joking about that. We didn't get smacked on in earnings, and if we did, it came right back up. That's just the bigger picture of that. I actually would love to see the forward PE drop a little bit, not for the wrong reasons of prices declining or staying flat while inflation gets here. That's going to pinch the individual investor and the consumer, but something's got to give here. I mean, you can't, if analysts don't raise those higher, you don't want to let them hit the ball out of the park too often. You want to be accurate in your job, and I know they work hard and try. But the other side of that is, when is enough enough? When is the mindset going to click and say, hey, we may need to move some cash? We've talked about rising interest rates last week, about how the 10 years getting to 1.5, which is the same dividend rate roughly as the S&P 500. But the big picture there is, hey, you can't, or I'm not saying you can't, you don't want to have a market, we're 20% higher than the 5-year average on the forward PE of 21.5. That's a hell of a lot better than if it's at 30 or 40 or you get into .coms and all that kind of issue. So I want it to level off, if not drop a little bit, because I don't want the extreme volatility that we've been having, like the Friday to Monday that we had over my trip. It's always good when you're traveling and the market's going up, but I would rather have more of a steady growth and analysts back and forth than the ridiculousness that we're seeing.
Yeah, and guys, just to put this in perspective, okay, when you watch CNBC and it says IBM reported earnings and they beat, right? They beat those estimates. When they're saying they beat those estimates, they're beating the estimates, not the company estimates that some of them provide. A lot of them aren't providing because of COVID still. Target said we're not providing it. Some of the retailers said we don't know. It's a crazy environment. Even some of the home builders. But probably 35, 40 analysts that cover Amazon, right? These are institutional analysts. When I say analysts, it's not us. We're buy side. This is sell side analysts. So these are the institutions like JP Morgan, Goldman Sachs. So then they take the consensus out of all of those, and that's the estimate they have to beat. So if all the analysts decide that they should be a lower number, it provides an easy beat. So you could see revenue grow or say earnings grow. They'll come out and say this company beat earnings estimates. They blew them away like Nordstrom did. But yet same store sales were down 20%. So they beat the analyst estimates, but the comparison year over year is still horrible, but they just beat the analyst estimates, what everyone focuses on. That's what we're talking about here. Analyst estimates are significantly conservative right now. They've been, go back and look at what Microsoft reported. Go back and look at all the FANG stocks and what they reported. If you look at even Facebook, you look at Amazon, all of them, they blew out the numbers by 30 to 70% on earnings. That's unheard of for a big company to and same with Zoom. They were just so behind the curve on the growth that some of these companies are seeing in earnings and sales and everything else. And a lot of that could be due because they're not tracking cost cutting as much. So, you're seeing, you're going to make more money per dollar, right? Per sale. If, you have 100 million in sales and your margins are going to go up tremendously if you're cutting costs, right? So your earnings could go from, $1 to $2 and have the same revenue because you cut costs tremendously. I don't see that factored in, Daniel. I don't think that's factored in. It makes me think stocks are in some areas are still, I'm not talking about ESG stocks or space stocks where all you have to do is say you're making a spaceship and you got a $20 billion valuation or these crazy SPACs. But
have you announced the Curzio spaceship flight?
Not yet, because we're a publicly traded company to our token. I'm going to say, and we're going to use renewable energy to fuel the rocket. So that's and green energy, and we are going to use AI. We're going to put AI all around the ship to monitor everything.
That's a good segue. AI. That's the next ETF.
And then cloud capabilities. This way, we're going to have video capabilities.
And mine for Bitcoin at the same time.
And then I'm going to go. Yeah. So and if you want to go on that spaceship, you have to pay through Bitcoin only. So I think I hit every single trend that would get me to a $20 billion valuation with no revenue. I think so. I think I hit everyone, right?
Yeah.
It's crazy. It's crazy. These SPACs are crazy. These SPACs are awesome. These guys are making a fortune. No risk. They're out of these stocks in 3-4 months. Just if you want to see something funny, you want to track something, Dan, this is cool.
I got you going. Look, this one's my fault.
If you go into the SPACs,
this one's my fault.
If you go into the SPACs, yeah, it's all your fault. Track the valuation of the company they just bought, that they just announced, because the valuation of that company would be like $300 million. 3 weeks before they buy it. And as soon as they announce the merger, it's like 5x more than that. What happened in a couple of weeks? What just happened in a couple of weeks to make your value increase by 5x, 7x? And what do they do in these SPACs? They don't care. Now they have this huge valuation on it. Then, they need to raise more money. They go to individual investors, right? And they say, okay, here's these pipes. We're going to offer you warrants, whatever. Again, they're all getting in. They're all making a ton of money before this thing comes out. All these guys are going to be gone in a couple months. I mean, that's why it's... Yeah, if you're looking at institutional investors, at these big hedge funds, what's the goal? The goal is to make as much money as possible and always be liquid. Well, there it is. Because if they really love these companies, why do you think that they're not investing in them in the private stage, which they used to do? Okay, we're going to take a percentage of this company. We'll help you. We get to bonus. We get to, as you're a private company, if you're doing more financing, we get a 20% discount on every capital raise after that. That's how it used to be. Now it's like, no. Immediately, why go through that whole process and the company maybe, raising more money later on and then, 6-7 years like Airbnb, 10 years, coming out on the public markets. Let's do this right away. You're a private company. We'll make you public right away. They're going to make it's going to blow up. It's not going to blow up now because it's a bull market and everything other than gold.
Yeah.
But holy cow, man, it's getting to the point where this is getting ridiculous. Alice Rodriguez and Kaepernick, come on. I mean, you hear those names getting involved in investments. And now we look at Portnoy, who I love, who's very involved. And, good segue here because, he's has an ETF that he created, right? I mean, out of nowhere.
Well, he put his face on it, as he says. So the ticker, I believe it hits tomorrow. It's Buzz, B-U-Z-Z. And Frank and I were talking yesterday, and, the beginning of the week is always kind of a head down, just blitz here. And Frank, you even said, hey, I saw Portnoy is doing something with an ETF or a SPAC or something. I hadn't even saw it yet. I looked into it, and I got to tell you, this is so out of my realm that I'm excited about it because it's an ETF. And if you go to investwithbuzz.com, Portnoy does a hilarious, first of all, this guy is a marketing genius, and it's going to be a great gauge on investor sentiment right now, Frank, because of the euphoria, the new. So I didn't listen to it yet, but Joe earlier on with you, he's not going away. I doubt he is going to change. He might change his risk adjustments and different things like that, but he's not going to change where he gets his information from. No. And so what this algorithm does is it uses AI, artificial intelligence, to scan blogs, news, and any kind of resources, and it gauges what's positive and negative sentiment and all this. It does 15 million pieces of data a month, and then it shrinks that down to its own, algorithm to figure out which businesses have positive sentiment and et cetera. And then it only invests in large companies. So it's at least $5 billion market caps. There's no more weight than 3% in each holding. But it's a great gauge. I mean, I'm excited about this thing because, I think it's going to go up a lot because Portnoy has such an amazing following. He has 2 million people on Twitter. Reddit has, the last time we were BSing about it, it grew from, 4 to 8 or something like that million users. Not to mention, everything is going to be liquid or highly tradable in this fund. It's going to be cool to see. Frank, do you have the link pulled up as to what they have or anything? I sent you a couple. Do you have one of those up?
I'll try to bring it up, but I was just showing from an article, 15 million online posts a month. They're going to use AI to measure those, and then we rank the top 75 stocks each month to create to feature in the Buzz Next Gen AI U.S. Sentiment Leaders Index. They should make
now. What's neat
they
about
should make it a
this
bigger name than that. The Buzz Next Gen AI U.S. Sentiment Leaders Index. They should make it bigger than that. It's not long enough.
And from an investor, an individual investor standpoint, you can look at this. This is going to, and there's a summary of the changes made for the February 2021 monthly index rebalance. They do this once a month, and it says what's in and what's out. What did they buy and add to the fund? What did they sell out of? So you can look at this from a couple different ways. What's out? FedEx, Frank, interesting. Logistics right now, I would think that's a boom. So obviously they're having negative sentiment or whatever else the AI algorithms are picking up. FireEye, crypto, or not crypto, excuse me, but cybersecurity, CrowdStrike, Nike, Canopy Growth, the pot stock that topped and has sold off. That's interesting to see, though, that these are out now, rebalancing. And then you can look at that and say, hey, what are people happy about or what are people positive about? They added Coca-Cola. Right? What the hell is who's writing blog posts about Coca-Cola that are getting the attention? So I think that's one way to really see how cool this is, to see what are people talking about, what is this algorithm picking up, what's Portnoy going to be talking about and Reddit and all this. I think this is a great way to invest in this new, younger and more focused and different analyzing or analytical ideas. I think this is very smart.
I think this is crazy. I think this is insane.
Well, I like it because it's going to give you a window into the mindset and the emotions. I think this is going to give you a good emotion. Oh, I like that. Timelines, countdown clocks.
Yeah, they're going to shut this thing down. There's no way they're going to allow this. And I'll tell you why. Because this has nothing to do. It's just a think about what everybody's going to think what everyone's going to do. I mean, it makes sense, right? Because now you're going to have the Reddit guys, whatever. There's 12 million people on that blog. You're going to have all these young kids pumping shit so they get tracked within an AI system, and it's going to have nothing to do with earnings, nothing to do with the company, nothing to do with other than the fact that everybody keeps talking about it, mentioning it. So now you're going to see more and more people post as many times as they can on every social media platform about these stocks and get buzzed and buy in early. This way, these things could absolutely take off to almost manipulate the market. But you have Advanced Micro is top 5 trending in the index here. You have, I thank you for the link. I was brought up. Yep. Ford Motor.
Now you make a great point, but that's only one step. So it has to be a $5 billion market cap. So it's not. There's no GameStops in here or AMC's.
I thought every company these days is a $5 billion market cap.
Well, that's true.
That's not even a
but
small
that's only
cap
one
anymore.
piece, and that's what's interesting to me. And Portnoy on his video pointed that out and said, "Hey, this isn't what we're looking for. It's not a get-rich-quick scheme. He's not getting paid to promote it, although he is an owner in it, and he said he's going to buy the fund as well, which I believe him. But that's because that's kind of where I went. I went to the GameStops and all that, but they have other things in place. Of course, you can always tweak those. Those are like discounted cash flow models where you can say Tesla's going to earn $30 billion in 2035 because they're going to have a fleet of taxis. But that's awesome. I like to. We got a 6-month bet. We got a drink on that.
I'm looking at this too, just the holdings here. It is, they have Caterpillar, they have Wells Fargo. I mean, Morgan Stanley. This is a small position in their portfolio here. Again, I'm showing this, in the video, but their top holdings here.
I can't wait to see the assets under management and if it grows or shrinks to see the following and all that. That'll, like I said, this gives you a lot of good data on a lot of different things for our current environment and mindset. So this will be fun to track.
It will be fun to track, I like the idea, I like the concept, but what this promotes is almost stock manipulation. So this isn't like, hey, we're buying the best growth companies because they're growing the fastest. No, I mean, they have things in here. Again, Virgin Galactic is one of their largest holdings. You're going to see tons of companies in here with no earnings. It's just going through here. But these are all the names that get mentioned the most that you're going to see on TV. And of course, it's going to provide a way of more and more people to talk about this. But that's how you get these crazy, sick moves in some of these stocks. And even we saw rocket companies, which, went up 40%, I think, yesterday. And now I think last time I looked, it was down 20%. Again, big short ratio. I don't know how long this could last where you just, hey, everyone's talking about these names because there's so much manipulation, there's so much garbage out there. I'm not saying that Advanced Micro, Amazon, Twitter, Facebook are garbage. No. Or Ford Motor, Novavax, these are some of their holdings, DraftKings. But there's going to be a lot of people talking about companies with $5 billion plus valuations that aren't really that good, and it's going to push these valuations through the roof. But more important is, this is a trading newsletter. This isn't a newsletter. This a trading ETF. It's not something that you're going to hold long term because it's just the flavor of the day or the flavor of the week. and I don't know how often they rebalance this, but I think this is going to create.
I believe it's monthly. They're going to rebalance it monthly.
So they balance it monthly, and again, so you have to figure that Tesla will always forever ever be in that index, forever ever, right? You know, just some of these names always forever. The Apples are going to always be in there. The Microns.
Hey, IBM's in there.
I know. I saw IBM. Wow.
Another interesting thing. Wonder who's talking positive about that.
So is it positive, or is it just creating buzz and talking about it? Because even if you talk negative about it, I mean, does it show up in here? It's got. How do you have AI tracking positive, or
it tracks
a lot of people talk
but
negative
they want,
about Tesla.
Well, they don't go into detail on all their other data points or whatever the algorithm is looking for, but investor sentiment, positive data, and things like that are part of it. But they also list like the top 5 and the top most favorable and unfavorable mentioned. So Dropbox, CrowdStrike, Micron, FireEye, and FedEx were the top 5 negatively trending stocks in the index, according to their algorithm.
Yeah, what I'm curious about is usually when you have an ETF, you have a benchmark. What's the benchmark for this?
I'm not sure, and I don't know about the fees yet either. So I think
they don't have the fees in here.
It looks
yet?
like, well, not on this. I'm not saying they're not out there. I didn't have it on
on
this, so I'll look at that.
Yeah, no, I didn't see the.
But I just think this is a great window into a lot of different things. So
I mean, it's cool. It's just, it shows like dividend yields 2% on average. P ratio is 34. It's always going to be high, right? You talk about exciting stocks, growth names. Average. What'd you say about market cap though?
It has to be at least $5 billion to get in.
Oh, okay. So the average. Holy shit! The average market cap, that can't be right. That's got to be a mistake.
Yeah, it says
that might be the bottom 5 for 306 billion.
Yeah.
That's the average market cap? No, it's got to be lower than that.
Well, obviously the largest one is Apple in there.
It's 2.1 billion. Yeah. So, just going through listen, they got a lot of good names. I like the concept, but it's just what this leads to. It can lead to a lot of manipulation of the markets, which I worry about. And, a lot of people just going crazy on social media, trying to pump their favorite stock and launch, that's the only thing. Again, it has to have a $5 billion plus valuation, which is good. So you avoid a lot of the garbage and people really pumping up penny stocks. But so it's going to be interesting how this is regulated. What's the benchmark for it? And what are going to be the fees for it? Because they're going to be sky high because people are going to love this. And he's targeting the whole Reddit crowd, which is going to really get into here. Not only that, think about this, Daniel. So with this index tracking all this stuff, how the hedge fund's going to play it with throwing those algorithms on top of this? That's what's interesting to me, because you're going to see a lot of these things move just because there's a lot of interest in them, which is going to create a lot of opportunities to sell short or, depending on what algorithms they have and how much money is going into some of these names and how they're tracking it. As well as I do, the Citadels and everything, all they do is front run the market, right? They don't care about anything.
Oh, yeah.
They just know what's going in. But now you're going to be able to see a lot of these names. It's going to be interesting to see, because how does Wall Street make a killing off of this? And that's not being factored in yet. And when it does, and when we see like the GameStops and all this shit come out and everything, then you're like, holy shit, we should have saw it coming. This spells to me that it could be very dangerous. I like the concept, but still, it's just, if you're going to promote a lot of garbage stocks to get in here, that's what I worry about. And you might see that from the Reddit crowd just trying to pump some of their favorite names.
Oh, I'm sure they will. It'll be interesting to see. I don't, like I said, I think they have the $5 billion market cap, whatever else is in there. They got to have something that's scanning for something else other than just a positive blog post, you would think. But who the hell knows? It'll be fun to watch. But it'll be a great trading vehicle. So, yeah. So everybody watch this tomorrow, BUZZ.
Yeah, no, it should be pretty cool. And I sound like an old man when I'm analyzing that thing, right?
Yeah.
You gotta be careful, regulation and stuff like that. But just look.
I give it 6 months.
I know. I give it 6 months. Yeah, that's gonna mark. Yeah, it's probably, this fund's gonna be the biggest in the world in 6 months, and you can come back on and say, oh yeah, 6 months.
Hey, I bought this thing on Thursday. I'm retiring.
Yeah. By the way, I don't work for you no more. Because,
I'll work from home.
Yeah. That's great. All right, Dan. Thanks so much for talking about the topics and everything. People really love this segment. We dig into what's trending, what we want to talk about, and we didn't even talk about Bitcoin, which is now over 50,000 again. How bullish we've been on that. But Daniel, thanks so much for coming on. And I know you'll come back next week.
Wonderful. Cheers.
All right, guys. Be sure to check out Curzio Research YouTube page. Subscribe, like it. Starting to get a lot of traction now. Just, everything we're doing, the newsletters, updates. If you're a subscriber, they're on video format. We love the video format here. It's really cool. I control a lot of this stuff, as you can see, where I have Daniel there. I have different pictures of me, which you can see my ugly face from 4 or 5 different angles, but it's a lot of fun bringing on guests. We have those interviews as well. So if you're interested, go take a look. Again, it's free to take a look at Curzio Research YouTube page. And also we have a lot of new content that comes out on that site as well. Two quick notes. I mentioned the Dollar Stock Club. We'll have a pick from Frank Holmes going in there, and that goes out on Thursday. Again, that's a product that's $4 a month. It's a great starter product. You can cancel 1 month if you don't like it, but when you see the research and what you get for the price you get, it's pretty cool. It's a good newsletter, especially for you, not just young investors, all investors. The performance is absolutely amazing. We hit some big winners in there, which is cool. And that can be found on our website at curzioresearch.com. And last week I mentioned it, Money Flow Trader, when we had Ginny on. So a lot of emails come in, and we're offering a 50% discount as you see the market over the past week. It's really crazy. As interest rates go higher, you've seen stocks come down. You've seen a lot of sectors get hit now. Not everything's a bull market. ESG stocks come down. Marijuana stocks come down. A lot of opportunities. Money Flow Trader provides a way to hedge yourself, hedge your portfolio. And this is a newsletter I said I'm proud of. Again, at 50% discount. On Friday, it's going to go away. It's going to be full price going forward probably for the rest of the year. But if you're interested, do it before Friday. Again, that's also on our website, curzioresearch.com. So, guys, that's it for me. Thank you so much for listening. I always appreciate all the support. March Madness is here. Hopefully, it's great with college basketball, although I'm going to miss the crowds. Next year, I'm sure it'll be full crowds. Alabama said they're going back to the full crowd. Everyone's going back to full crowds next year. But we're looking forward to March Madness. It should be really crazy. A lot of teams that could win it this year. It's not going to be Gonzaga. It never is. But we'll see. We'll see. Hopefully they win. I hope Mark wins. He deserves it. He's always got good teams. But apparently when it comes to playing really good teams, they don't do as well, especially when you got to play back-to-back and really good teams. But they have beat a lot of great teams this year, and they smoked them. So I'm rooting for them. But, man, I don't know what they're going to do. But looking forward to March Madness. And as always, guys, I'll see you in 7 days. Take care.